Joining me now live in our Lagos studio to discuss this development and much more, I have economist and chief executive officer of finance with Mukhtar Mohammed. Good to have you on the breakfast show this morning.
My pleasure. Happy Easter.
Same to you. Now let's start first and foremost with the pendulum swing we've seen with regards to our foreign reserves at this point in time. There are forecasts that, well, this will average at about $42 billion this year. Are you sharing in that same optimism that would see this rise on the back of oil prices improving and then the vaccine deployment, or you still think these are shocks that are beyond us and we should just expect anything?
No, I think it will rise based on that. And again, we have to be happy that the CBN is the NNPC that is paying subsidy now. so maybe that's why our reserves will not suffer. If you looked at what you see in February, they said it's 1.1 billion in February. It was down by 1.1 billion. And in March, it's just down by 178 million. So that's a remarkable improvement. It's a remarkable improvement. So that has to do with the oil price. It's a little bit stable now. And also the CBN is trying much by its best to see how they can limit the volatility, especially in their terms of intervention in the forex market, coming up with administrative purposes. They could say that their last administrative purpose of saying to pay $5 to every Nigerian. I think that is also beginning to yield, or they could attribute it also to their intervention in the market has not been huge like what we had before. TBN intervened in the market up to like 800 million because it intervened $200 million weekly. So, and what we have is 178 million in a month. So that is quite remarkable.
But for so many economists now, they say, well, the CBN also has to change its stance of managing the float of forex policy, talking about liquidity injection, because at the end of the day, this is not sustainable. This is not the best approach to managing forex scarcity. We've had airline operators also say, well, we are not having enough of foreign exchange. Our main source of foreign exchange still remains oil. And then what we receive from diaspora remittances, at the end of the day, we have to diversify our base. But how do you think the CBN can go forward beyond liquidity injection on a weekly basis?
Attract foreign direct investment. That's just the way to go. Foreign direct investment is what is causing the volatility we are seeing in the market, the forex market. And also in the import-export market, also we are not having those inflow, even portfolio investors are not coming like they used to come. And this is not because they don't want to come. We keep saying it's because of the exchange rate.
The CBN will make mention of the NAFEX window.
The NAFEX window is there, but when you look at the FX, the exchange rate, the difference between the parallel and the official, and even the FX, the import-export is too wide. You're looking at 485
to 410.
To 410. So the difference is wide, even in the import-export window. So you're looking at the conversion, even if there will be a difference, if it's a difference of 460 to 430, then you begin to look at that.
That's a closer margin.
But the margin is still high, about 90 naira to 85 to 70. It depends on even the demands. So and when you look at the diaspora remittance, it's not going to be sustainable because even the diaspora also are suffering because most of them did not do any activity during the lockdown.
The
impact of COVID-19. So the only source of income is oil. Is oil, it's crude oil that we're selling. And then remember that we sell our crude in one hand, we do refining petroleum products in the other hand. Now we are not seeing those volatility, we are not seeing those complaints from independent marketers because they are not even importing. It's only the NNPC that's importing. And the NNPC has their own, from the sales of their crude, from other businesses, they have their own FX. So that's what they're using. So by the time the independent marketers are asked to import and they have to depend on the CBN demand, then you see that we'll not be able to sustain 410. So for me, the short-term measure is good, but we need to begin to think of how we can attract both foreign direct investors and portfolio investors. If we can do that, then we'll minimize the volatility of the exchange rate.
And to even do all of this, we need increased volume in terms of our infrastructure development and the deficit that we have at hand, because there's no how you can attract foreign direct investment without having a very sound economic climate for investors to come in.
Yes, and that is why we keep saying that the monetary policy is the one sustaining the economy. There's no fiscal policy
exactly
yet. Because until the physical side begins to do what they do, what they have to do, then the monetary policy will now begin to see the effect of their monetary policy policies. Then we'll see those conversions. For now, it's just monetary policy sustaining the economy. Fiscal policy keeps telling us about the infrastructure they are developing. Then when you look at the fiscal policy, you look at the job angle and you realize that a lot of the data that come up in Nigeria Bureau of Statistics was about 33 million Nigerian youths are without job. That is alarming. That is alarming.
Let's now talk about the forecast from Fitch Ratings as well. Looking at the average, we'll see Brent crude also trading. They're pegging it at about $53 this year. But currently, as we speak, it's trading at about 60, 65, 62, thereabout, within that range. Itching closer to the $70 per barrel margin we earlier had pre-COVID-19. But for us to improve trade and have improved foreign exchange reserves, we also have the concerning issue of Nigeria's Naira, the devaluation so far. What's your forecast for Q2? We've seen the performance last year. We've seen this first quarter performance on the back of gradual recovery. What do you think is going to likely play out with the Naira going forward into this quarter?
The Naira is still going to
drop further
because unless we begin to attract, like I said, foreign direct investors and portfolio investors, especially through the import-export window. Remember, we've been this route before when the Naira went as high as 500, and that's when we created the import-export window, and that brought down the volatility. And at the point we got to about 360, and then there was improvement also in terms of oil price at that time. Now, oil price will definitely improve, but remember that the improvement that you've seen in oil price has to do with the cuts by OPEC. So by the time OPEC said, look, every nation are free to produce as
they're still looking at the final adjustment for June, May, June, thereabouts.
So that will cause another issues. So that could bring down, and so that's why Fitch is bringing at $53 per barrel, because they realize that when you open up that space and nothing externally happen, maybe US having issue with China or Iraq, Iran issues doesn't come up, then you could sustain that. So, but for now, I think when you look at all the parameters, look at all the indices, it's not looking good for the Naira. And that's why if you look at the CBN, all they've been trying to do recently is to look at the administrative side of it, how to attract stabilize the currency through the administrative side of it. They sort of started out going after the betting company for infringement. After that, they came up with the administrative thing that you can now receive dollars. You can receive your dollar paid instead of before you have to collect Naira for every dollar. That now the net went further, bringing up to attract diaspora remittance with giving of dollars also. So they are trying to look at the administrative side. The administrative side can only sustain for the short time. What really sustains us is going to be the revenue and also the investors that we're able to attract, bringing in these effects. So for now, it doesn't look good. And look at the fragile nature of the economy, and even the talk about the third wave, possible third wave again, is not looking good for the Naira.
And how do you think this would also affect or not affect the next MPC meeting in terms of the decisions to be reached? We've seen MPC still retain its rate, saying that this is just the best approach at this point in time. Loosening, tightening cannot be sustainable. Just retain.
You see, they have to retain. Because they have two monsters they are dealing with. One monster is inflation, which has gone to an all-time high. Then the second monster they are dealing with exchange rate volatility. Now, if you look at MPC meeting of recent, they've not been able to address those issues. They've not come out with a clear-cut policies on how to address these two very big monsters. Okay. So, for me, I'm not seeing anything will change going forward. The only thing that we hope will change, there's been direct intervention by the CBN into key sectors. We'll see how that plan out when the data start coming in from the Nigerian Bureau of Statistics. That will determine what they will do. But I don't think the rate will change, especially in trying to help small business recover from the COVID-19 pandemic. You cannot begin to tighten this thing, because you want them to have a little bit of liquidity in the system to be able to create jobs, so that because the job figure is not good, then so that they could have that snowball effect in other aspects, especially in the SMEs. And also the banks also are beginning to be stretched in terms of non-performing loans. Also CBN have to come out with policies that will help them.
Thank you very much for your time on the Breakfast Show this morning. We've been speaking with the Chief Executive Officer of Finance with Muktar Mohammed. Happy Easter.
Thank you.